accounting standard that each one of us has to be aware of. Now, I'm sure you are working in different industries, you are working in different sectors, and
Wanted to gain myself.
yes, you were saying something. So, guys, just a small request. Please accumulate all the questions that you have, and I will be addressing those towards the end of the session. This entire series on accounting standards, we started this around 2.5 months ago. At the beginning, we not that regular, as in we covered a couple of accounting standards. We did IAS 37, we did IFRS 16, but after that, we did not pursue too many regular classes. But since the last 1.5 month, every Thursday or every Friday, we meet once at 1 p.m. in the week, and we we have done a lot of detailed work in IFRS 15, and all of that, by the way, is available on my YouTube channel. So right now, towards the end of the session, I will also give you an access. I'll give you a link for my YouTube channel, and I'll guide you further in how other aspects also can be dealt with. All the questions that you have, please make sure that you park them in the chat box, and I'll take those up towards the end. So, in the 4 sessions that we did on revenue, the first 3 sessions were on the first 5 steps of the revenue recognition process under IFRS 15 or Ind AS 115. So, yes, all those questions will answer. Let me finish what I have started for today. Every single question, please be assured those will be answered. So, just to answer the question in the Q&A box, uh, this is not an orientation session. We might start a dedicated batch for Diploma IFRS, but this is a series of masterclass where we sit and discuss accounting standards. So that is the primary objective. But I'll gauge interest, and then we an IFRS batch also. But for now, I'll tell you what the background has been. As I told you, in the first 3 sessions, IFRS 15 series, I covered the first 5 steps of revenue in proper detail. And then in the last session, in the last week, we spent 1 hour discussing how accounting for warranty is done. So if it is is it a warranty at the request of the customer? Has the customer paid anything extra for it? So all of those points were discussed in detail. Today, I want the focus to be on significant financing component in IFRS 15 or Ind AS 115. Now, there are hardly any differences per se in the Ind AS and IFRS, because there are certain carve-in carve-outs that we will much later, and that too if participants want it. Otherwise, what you study for IFRS becomes the overriding rule for everything else except for the carve-in carve-outs. Session, as in the last class, is to focus on the significant financing component. Now, significant financing component, the idea stems from the fact that your service provider wants to he also does not want to leave any opportunity of doing business. उसको business करने का एक भी opportunity छोड़ना. I there is a watch that I want to buy. 1.5 lakh का घड़ी है. I go to a Rado shop. I see the watch. I want it. I don't have enough money in my pocket. So what I do is I go to a bank. I take a loan for 150,000. I pay cash to the Rado showroom owner. I take the watch. And over the course of next 1 or 2 years, what do is I will have to repay the amount borrowed from the bank, and along with the amount that I have borrowed, I will also have to pay interest. Now, if I have borrowed 1,50,000 and there is a 10% interest, and I'm paying the entire amount in one go, I will have to pay 1,50,000 plus the amount of interest. Now, uh, now the seller, Rado shop owner, realizes that Satyamid went to a bank, he took 1 lakh loan from, he paid 150 to me, and later on he repaid 1,65,000. 1,50,000 plus 15,000. Now the Rado showroom owner thinks, why should bank have all the fun? Why can I not offer services to the customer? So what the Rado showroom owner tells, when you want watch, great, take the watch, but you don't have to pay. You don't have to pay for the entire amount today. Who's asking you to do that? Do one thing. You take the watch with you today and make the 1 year. If you pay after 1 year, you will have to pay the cash price, that is 1,50,000, plus you will have to pay a certain additional component of say 15,000. Now, see, I desperately want the watch. I want to show off. So I am okay paying him this particular amount. I am okay paying him a total of 1,65,000 after a span of 1 year. As as a business owner, what does the Rado shop owner think? The Rado shop owner thinks that instead of letting the customer go to a bank and taking a loan from the bank, why don't you only give him the facility of delayed payment? Why don't you only give him the facility of delayed payment? Let him pay after 1 year. So the Rado showroom owner, what he is doing is he's selling me the watch for 1,50,000. The additional 50,000 that he is charging me, the additional 15,000 that I have to pay him after the expiry of 1 year is not the price of the watch. It is the consideration that he is charging from me for giving me the facility of making delayed payments. So 1,50,000 is the income from sale of watch. Another 15,000 is not income from sale of watch. It is the money that I am collecting from you for giving you the facility of making a delayed payment. Now, if you remember, on day one, when we had discussed, revenue was the money generated or in amount earned from the main business activity. Okay. What was revenue? Revenue was amount earned from the main business activity. Okay. And the Rado shop owner in our example, the Rado is a watch brand. I'm sure all of you are aware of that. The Rado shop owner said, if you pay today, you have to pay 1,50,000. And if you pay after a year, you will have to pay an amount of 1,65,000. The additional 15,000 that the shop owner is charging is not for the watch. No, it is for the facility that was given. It is for the facility to delay the payment. So 1,50,000 is income generated from main business activity. So 1,50,000 is the revenue. This 15,000, this is my additional amount. Okay. Shadow shop owner deals in watches. Okay. It is not the shop owner's business to give loans or to give facility of delayed payments. That is not his business. So this 15,000 basically is not revenue. Okay. I will have to call it my finance income. This is my finance income. Okay. So when the sale happens today, see, there are a couple of essential ingredients in this activity. We'll understand what these ingredients are. Sale happens today. Okay. And payment is after 1 year. So there is a significant time gap. Okay. There is a significant time gap between sale and collection of consideration. In this case, you will say that there exists a significant financing component. Why? Because there was a significant period of time. That is not the reason why we call it significant financing component. There are more reasons, but if you want to identify whether a significant financing component exists or not, there has to be a time gap between the date of sale and the actual date of payment. If I walk into a kirana store and I say कि भैया I am taking the material today, मैं आज सामान लेके जा रहा हूँ कल सुबह दूंगा, that is not a long enough period of time. So there is no interest component involved there, there is no financing activity happening there. So there is no significant financing component here. There is a time gap between the date of payment and the date of entering into the transaction of sale. Hence, in this case, we mentioned that there is a significant financing component. So what we are going to do is, whenever such a situation exists, make a note of the total consideration. Total consideration is 1,65,000. But this will be collected after 1 year. What amount would the customer pay if he was paying for the watch immediately? अगर वो आज पैसे देता तो कितने देता? He would have paid 1,50,000. He would have paid 1,50,000. Okay. So 15,000, sorry, 1,50,000 is the amount for sale of watch. ठीक है, 1,50,000 is the amount for sale of watch. This is my revenue and difference. What is the difference? 1,65,000 minus 1,15,000. 15,000 is my finance. So today, when I on the date of sale, ठीक है, on the date of sale, what entry do I record? I record an entry by customer account debit to revenue, revenue from sale of watch or whatever, by customer account debit to revenue account. Usually we credit sale, हम ऐसे revenue को credit ऐसे तो नहीं करते हैं. This is 1,50,000. Now 1 year from today. Okay, so today is say 10th of Jan 2025, or maybe the transaction was done on 1st of Jan or whatever. 1 year from the date of sale, 1 year from the date of sale. Okay, 1 year has gone by, still our dear customer has not paid us a single rupee. So we gave him the facility to delay the payment. Uska another 15,000 we have to charge. So by customer account debit, excuse me, to finance income, 10%. Because we are assuming that that is the rate of interest prevailing for all such transactions. Okay, if you observe, finance income is also an income, but it is not revenue. It is not income from the main business activity. And then I will record the entry for collection, which will be by bank account debit to customer account. By bank account debit to customer account, 1,65,000. Okay, this is the accounting. This is the basic part of significant financing component. Today we are going to delve deeper into how all similar transactions are recorded. This is the base part of it, and so either party may benefit from the financing. See, as a customer, I am getting an option to push forward the payment. As the supplier, as the seller, I am getting to earn more money. So, and it is not necessary that the contract should explicitly mention that there is a significant financing component. When you walk into a shop, or when you join any coaching institute also, because I'm sure for your CA, ACCA, all of these courses, you must have joined some institute. Very seriously. I request you to put yourself on mute so that other participants should not be disturbed. So I'm sure when you joined a coaching class, or when you joined anything for CA or ACCA, they must have said, if you pay today, And they don't say if you pay today 1 lakh, if you pay after 6 months 1 lakh 20,000. They are very smart. What they say is, sir, if you pay under a regular plan, you will have to pay 1 lakh 20,000. But we are offering a spot discount of 1 lakh rupees. If you pay the full 1 lakh rupees right now, we are offering you a discount of 20,000, which means if you take a longer time, if you take the facility of payment in installments, okay, if you have the facility of payment in installments, see, I have not shared the screen. So uh, there will be, let me reshare. Can you see the screen now?
Yes.
Okay. And guys, is my voice breaking? Is everyone able to hear my voice?
Yes, sir.
So, Akash, I will answer your questions later. Let me finish the discussion on accounting standard. All individual questions that everyone, I will take those up towards the end. Is that okay? Okay. Chalo. Now, where were we? See, ऐसा हो जाता है sometimes. So we were talking about, yeah, how coaching classes and all of these people, how do they behave? They will not say, oh, we are offering you a loan service or we are offering you financing facility. No, they will not say that. The contract might not explicitly mention also that there is a significant financing component. But the nature in which the business is conducted, that will itself be an indicator of the fact that there is a significant financing component present. So the objective when adjusting the promised amount of consideration for a financing component is for the entity to recognize revenue that reflects the price of the customer, sorry, the price that the customer would have paid, that is the cash selling price. Okay, so the reason is, why are we even separating out? Somebody might say कि अरे जाना तो P&L में ही है ना, everything is going to P&L. So why are we separating it out into two parts? Why is there a need to separate it out into two parts? Now, if you remember, if you look at a typical income statement, you have revenue, you have less cost of sales, you have gross profit, and then you have all the other expenses, and then you have your investment income, finance income, so on and so forth. As a reader of the financial statements, as a shareholder, as a majority investor, as a lender, as anyone, I would want to know how much money is your main business generating for you. Understand this from, see, we are not accountants only. We are trying to understand how financial reporting works. If I am giving you a loan, or if you are a startup, okay, and I am a venture capitalist, I am an angel investor, and I want to give you money. You know what startups do? Startups, they say, for example, you must have seen Shark Tank. They get 1 crore, 2 crore, 3 crore ka funding. They take that money, and not all of that is going to be invested in the business right away. So what they do is they maybe use crore in the current year, and the remaining amount that they have, they keep it in a fixed deposit. So fixed deposit may, if you keep 9 crores and on that you earn say 9 or 10% interest, you will get a good 90 lakh rupees as interest income. But this interest income is not income from the main business activity, right? This is not income from the main business activity, because I want to evaluate the capacity of your business to generate revenue. I want to see, can you attract customers and can you bring them to the table and product to them? I want to evaluate that. If I'm a venture capitalist who wants to further invest in your company, if I see interest income in your P&L, I'm not really interested in how much interest income you are earning. वो तो आपको, that is passive money. I want to see the income generating, cash generating capacity of your business. And how will I know the cash generating capacity of your business? I will have, or आई विल वांट टू सी कि भाई आपके प्रोडक्ट में दम है, लोग आपका प्रोडक्ट खरीद रहे हैं, कि आप सिर्फ indirect sources से पैसा कमा रहे हो. So to get a complete idea of that, my income has to be split between revenue and other income. How much am I earning because of the sale of the product, and how much am I earning because of other ancillary activities? Hence This split is very important. If that was not the reason, we would have never gotten down to split it between the two. And what is cash selling price? Cash selling price is amount that a customer would pay to purchase the product right now. In simple terms, that is the meaning of cash selling price. And the final consideration, this is my total consideration. Total consideration, including amount charged for the main goods or service, plus amount charged for the facility to delay the payment. And the difference between the two, okay, the difference between the two is your finance income. Now, in some cases, it might happen that they will not give you the cash selling price and the total consideration. They will just say that after 1 year, the customer has to pay us 1,65,000. So they will give you the total consideration. They will not tell you what the cash selling price is. In that case, what you have to do is you have to calculate the present value of the future consideration. So where such split is not given and only total consideration is given, then revenue will be equal to the present value of future cash flows. Okay. So present value of 1,65,000, assuming rate of interest is 10%. Okay. So present value will be 1,65,000. You know how the present value is calculated. 1 upon 1 plus r raised to n. So this becomes 1,50,000. This present value is your revenue, and then the difference is the financing component. Now, as always, the accounting standard will never say that, accounting standard will never define what is a significant duration of time. Now, acha, one more thing before we move ahead, the rate of interest is the rate prevailing in the market for financing of such goods. If you are buying electronic goods, you know how much would a bank charge as interest when they are giving loans for the purchase of electronic goods. You have to use that particular rate. Okay. Rate to be used is rate prevailing in the market for that particular item. Rate to be used for discounting is rate of interest prevailing in the market for financing of same slash similar goods. So as I said, if HDFC Bank is giving you loan for appliances, home appliances ki loan ka rate 10% hai, so you will use the same rate here. Okay. Now, that rate should also reflect the credit characteristics of the party receiving financing in the contract. Okay, as well as whether any collateral or security has been provided by the customer or not. Because for, see, all of these are unsecured loans, which is why the rate of interest is likely to be higher. In case of these personal loans, banks will sometimes charge a very high rate of interest, 16%, 18% tak rate of interest, 21% tak personal loan pe, banks charge rate of interest. An entity may be able to determine the rate by looking at the nominal amount of consideration promised, and they would have to, adjust the interest rate for other conditions prevailing at that particular point in time. It could be credit worthiness of the customer. It could be something, the additional challenges that you are facing because a collateral security has not been provided. But once a rate of interest has been fixed, once a rate of interest has been arrived at at the inception of the contract, then you are not supposed to change the rate of interest later. IFRS 15 is specific on that particular part. And the amount allocated to the significant financing component naturally has to be presented separately, right? वो आपका finance income या investment income में आएगा. Interest is only recognized to the extent that a contract asset, contract liability or receivable is recognized in accordance with Ind AS 1. Now, what does that mean? ठीक है. So there is a specific clause, and here Ind AS 115 and Ind AS 109 be understood together. The accounting standard says that interest is recognized to the extent that contract asset or receivable is recognized. So, interest income is recognized only to the extent contract asset or receivable is recognized under Ind AS 115. So जितना आप receivable recognize करेंगे, to that, see यहाँ पे you recognized a receivable of 15,000. So finance income also gets recognized to that extent only. Now you might have a situation where, say for example, the contract says that the billing to the customer is going to happen on, say, 10th of January 2026. I sold the goods today, 10th of Jan 2025, and the amount will become receivable from the customer only on 10th of Jan 2026. Now, there is a 31st of March that we are crossing right now. On 31st of March 2025, the financial year will change. What they are saying is, are you recognizing a receivable on 31st of March 2025? No. So, if you are looking at passage of time or efflux of time to decide whether interest income should be recognized, they are putting a specific stop on that. What they are saying is you can recognize interest income only to the extent contract asset is recognized. Now, the entry for finance income, I'm not doing it right now. The recoverable amount of additional 15,000, cash price 150 है, वो तो recoverable today. I recorded the entry debtor to sale, but finance income, द फैसिलिटी फॉर डिलेड पेमेंट, इसका पैसा मुझे कब कलेक्ट करना है एज पर द कॉन्ट्रैक्ट, दैट अमाउंट बिकम्स रिसीवेबल ऑन 10th of Jan 2026. So I will record the entry for receivable only on 10th of Jan 2026. 31st of March को an entry will not be recorded unless the company policy specifically tells you to do that. So if the receivable is going to be recorded later, then naturally the finance income should also be recorded at a later date, not on 31st of March by considering month equivalent record कर लो. That is what the accounting standard specifically prohibits. Now, this is an additional point, correct? कि 31st of March को revenue recognize नहीं करना है. Let me write it down. Now, if the entry for entry for recoverable of 15,000 additional from customer is to be uh, recorded on, say, 10th of Jan 26, which is 1 year from now. ठीक है. If that is going to be recorded on 10th of Jan 26, आज से एक साल बाद, and financial year ends on 31st of March. So, since additional receivable of 15,000 is not recorded on 31st of March 25, the proportionate, sorry, the finance income will also not be recorded. Okay. The finance income will also not be recorded. It will be recorded on 10th of Jan 26 when the receivable gets recorded. Okay. Now, you might want to understand that if there is a significant financing component, is there also an insignificant financing component? Okay. Ab, uh, let's see if there is an insignificant financing component also. Let's, I mean, I can only think of aeroplane examples for this, or basically a big asset. Okay. So, financing component, is it significant or insignificant? Okay. Now, oh, sorry, one moment. Yeah. So, if there is a supplier who sells aircrafts and parts of aircraft, ठीक है. अब somebody who sells aircraft and parts of aircraft. Now, say for example, he enters into a contract with a customer for a promised consideration of 70 lakh. What is the consideration? Consideration is 70 lakhs. ठीक है. Now, based on evaluation of certain facts and circumstances, uh, this 70 lakh price included a financing component, which we wanted to evaluate whether it is significant or not. Okay. Now, what happened was there was an advance payment received in excess of a year before the transfer of control of the product. Okay. So, advance payment was received before the transfer of control. So transfer of control happened when the aircraft and the component was ready. But there are cases where the supplier says that to start working on your output, to start working on your order, I will need an advance. Even a cake supplier might sometimes ask कि भाई wedding cake बनाना है तो I will need an advance because it's a big it's a big cake, it's not something usual. तो उसमें पैसा भी supplier का भी a lot of money and cost is going to be involved. Here, let us assume that there was an advance payment that was received before the transfer of this particular product. So that amount was 1,40,000. Say the advance received was 1,40,000. Against a total sale value of consideration of 70 lakh, you received an advance of 1,40,000. Now, what is this advance? How come this advance is considered as a financing component, or how is this related to the financing component? Can anyone throw some light on this? Okay. Now, it is a very common practice to ask the customer for an advance. When you ask the customer for an advance, ऐसा नहीं है ना कि you forfeit that money. This amount is later on adjusted against the selling price of against the final consideration that you are going to receive. ठीक है. Now the total consideration is 70 lakh. The customer has paid you a very small token amount. Sometimes when you go to purchase a property, you go to purchase a house, आप क्या करते हो, आप एक टोकन देते हो. That token is a small number. The house could be for 3 crores. आप say for example आप एक 5 लाख का टोकन देते हो. ठीक है. Now that token amount is also adjusted against the final price, right? आप supplier को 2 crore additional नहीं देंगे. What you will give to the supplier is 2 crore minus this 5 lakh. So you will only pay 1,95,000. The when the advance payment is large, ठीक है, advance payment is large, and say instead of 5 lakhs, you are giving 50 lakhs to the customer. ठीक है. Now, financial component doesn't necessarily mean that it has to be uh, a significant amount. It could be a small amount of token also that is given. And this token, what is the impact of that amount on the final transaction price? ठीक है, अगर मैं आपको बोलूं कि if you purchase the CA final FR course from me today, you will get it for 1 lakh. And if you purchase and if you pay the amount 10 months later, you have to pay 1 lakh 1,000. It's a very small proportion of the overall selling price. So ये 1,000 का आप adjust नहीं भी करो तो भी it's not going to have a major impact on the amount that the customer is going to pay you. आपको more or less same amount ही मिलेगा. So if I were to change the example a little and make it, a little more closer to your life, if you pay for CA final with me today, you will have to pay 1 lakh. And if you pay after 6 months, आपको कितना पे करना पड़ेगा? 1,01,000. So, is there significant financing component? मतलब the amount of additional consideration should be in a way indicative of the time value of money. ठीक है, if 6 months have passed and the rate of interest in the market is 12%, 6 months का 6,000 तक तो interest you should have charged the customer, right? But you are not charging that amount. For purchase, or sorry, for settlement after 6 months, you are only asking for a very small additional amount. In that case, the finance component will be insignificant. ठीक है, in this case the finance component will be insignificant. There could be cases where 1 lakh and the sale is on commercial terms. Sale is on commercial terms matlab the additional amount that you are charging from the customer is also reflective of the time value of money. ठीक है, so if it is reflective of the time value of money, then you say that there is a significant financing component present. यहाँ पे you will insignificant है financing component, insignificant financing component. ठीक है, small amount. I could also write at some level that this is the additional 1,000 charged is in no way reflective of time value of money. Now imagine if you go to a bank and you know that the rate of interest in the bank is 8%. So if you deposit 1 lakh, you should expect 1 lakh 8,000. That is significant. But if what you are getting is only 1 lakh 5,000 after the end of 1 year, फिर technically आपने कोई interest earn नहीं किया ना. So in this case, what they are saying or what the accounting standard is trying to say is that the amount of additional price charged is a very small proportion of the contract price, and hence the financing component is considered as insignificant in this case. जो पुराना AS9 था ना, students who have done their CA inter and are yet to get exposed to CA final, अच्छा, a part of this is now my voice is also a little not fine. Maybe because of that you are feeling that my voice is trembling. Is my video also lagging?
No.
अभी आवाज कैसे? मैं थोड़ा, मेरा गला ठीक नहीं है, मे बी बिकॉज ऑफ दैट एवरीवन इज थिंकिंग कि अभी अभी वॉइस लैग हुआ.
No, not from.
मे बी
No, sorry, it is fine.
it's a combination of, I think, I don't know, internet and my broken voice. I traveled a lot this week, तो थोड़ा weather change के वजह से my voice is a little affected. Yes, recordings will be available. Please don't worry about that. ऐसा अटक जाता है voice थोड़ा सा. Okay. In the old AS9, na, there was no such dissection of transaction price into multiple elements. They were very clear. 1,21,000 को पूरा revenue in बोलते थे वो लोग. But Ind AS 115, which is adapted from IFRS 15, has made it amply clear that you should use you should split the total transaction price into revenue and into the finance income. ठीक है. Now, how should you choose the, how should you determine the discount rate? Is there a way to determine the discount rate? ठीक है. Now, there could be two situations where the contractual discount rate reflects the rate in a separate financing transaction, and where the contractual discount rate does not reflect the rate in a separate financing transaction. There are two situations. Let's understand both of them. Okay. How to determine discount rate? Of course, we'll have to do this with an example. अब ये sheets का क्या होगा, notes का क्या होगा, recording का क्या होगा? I request you to wait for another 10 minutes. I will explain you everything. Let me just finish the part that we have started. Okay. So now, say for example, Rahul. Okay. Rahul into a contract to do what? Rahul enters into a contract with a customer to sell a machine. Okay. And control of the machine transfers to the customer when the contract is signed. ठीक है. So sale complete हो गया. The price stated in the contract is 1 crore. So ठीक है. Price stated in the contract is 1 crore, and there is a 10% contractual interest rate. ठीक है. Plus a 10% contractual interest rate. There is some more information. Amount is payable in 60 monthly installments. Okay. So, excuse me, amount is payable in 60 monthly installments of 212,470 each. Of 212,470 each. Okay. Now, determine the discounting rate and the transaction price. Determine discounting rate and transaction price. If case A. What is case A? Contractual discount rate reflects the rate in a separate financing transaction. Contractual discounting rate reflects the rate in a separate financing transaction. Now, what does that mean? The contractual discount rate reflects the rate in a separate financing transaction. In evaluating the discount rate in the contract, that in a contract that contains a significant financing component, you want to check what is the appropriate discount rate. The company observes that the 10% rate mentioned in the contract reflects the rate that the company would charge in a separate transaction with any other customer also. So looking at the credit characteristics of the customer, looking at the average discount rate that you would charge generally would be a rate of 10%. So the market terms of this kind of financing, whenever there is a cash selling price of 1 crore and a customer wants to delay the payment and make the payment after a significant duration of time, the rate of interest that you charge under normal circumstances, under separate individual financing transactions also, is a rate of 10%. Then you can continue to use the rate. But what happens if the customer, what happens if the contractual discount rate does not reflect the rate in a separate financing transaction? Okay. Now what is the situation? The rate in the contract is significantly lower than the rate that would be charged in a separate transaction between the uh, customer and the seller. Okay. How do I decide the rate of interest to be given? The rate of interest that is given basically depends upon the market conditions, depends upon what everybody else in the market is doing, but it also depends upon your characteristics. You are a customer who has higher chances of, you know, def- higher chances of default, then in your case I will charge a higher interest rate. Or if you are giving me a collateral, I might keep it at a 10% rate. But if you are not giving me a collateral, I would charge a higher rate of interest from you for that particular reason. So second case in this situation is case B. Contractual discounting rate refers the rate in a separate financing transaction, which is say 14%. So looking at characteristics of this customer. So looking at credit profile, ठीक है, past payment history, history of default, ठीक है, ये सब देखने के बाद looking at credit profile, past payment history, history of default, we conclude that a 14% rate is appropriate. But in the contract, we only charge 10% rate. We don't charge him the rate of interest that we should have charged because of his ability to give a collateral, because of his past payment history, etc., etc. So that means, although yahan pe the cash selling price of the contract is stated as 1 crore plus 10% contractual interest rate, the actual cash selling price is deemed to be much lower because the amount that you should have charged from this particular person for interest has to be higher. ये घोटाले वाला कस्टमर है, ये डीले करने वाला कस्टमर है, ये डिफॉल्ट करने वाला कस्टमर है, ठीक है. This is a customer who is most likely to make a default. So in this case, the entity will have to calculate the transaction price separately. How will the entity calculate the transaction price in this case? So what they will do is they will calculate cash price as the present value of the amount considering 14% rate. Okay. You will have to calculate the present value considering 14% rate. But in this case, do you observe this 1 crore cash price we are ignoring now? So we are 1 crore cash price कब था? 1 crore cash price तब था when the rate of interest was 10%. Looking at his history of default, looking at his ability to give a collateral, the rate of interest charged supposed to be charged was 10%, and in the contract also we are charging 10% interest. So हमें कोई problem नहीं था in that case. But excuse me, right now what is our problem? Right now our problem is कि भाई normally we should charge 14% rate from him because he is not giving me a collateral, because he has a past history of default. So I should charge 14% from him, and मैं charge कर रहा हूँ 10%. So the transaction is not at commercial terms. So what we'll have to do is ये जो 60 installments you are going to pay ना, there are a total of 60 installments you are going to pay. So what is the present value of all such 60 installments? अगर मैं instead of 5 years from now, what if I were to collect all the amount today? What if I were to collect all the amount today? What would be the cash price? I will have to determine the cash price. So cash price will be calculated as present value of all future payments. That is 2,12,470 monthly discounted using 14% rate of interest. Why? Because looking at the credit profile and the past behavior of this customer, 10% rate is not justified. So when the rate in the contract is different and the rate for a separate financing transaction is different, what you will have to do is whatever are your future cash flows, uska aapko present value nikalna padega. So 2,12,470 monthly, uska aap present value nikalo. That amount is your revenue. And in this case, every month आपको उस पे you will have to keep on adding a finance element. कैसे आप ऐड करेंगे finance element every month? Now 2,12,470 present value. ठीक है, 60 payments, 60 payments monthly. Now, uh, I hope, excuse me, I hope all of you know how to calculate the present present value when the calculation is to be done on a monthly basis. See, agar 1,10,000 is to be received after 1 year, what you do to calculate the present value? This into 1 upon 1 plus r raised to n. Here it is 1 year from now, so I do raised to 1. But when when am I receiving 2,12,470? I'm receiving it 1 month from now. 1 month from now means how many year? 1/12 years. So इसका अगर मुझे present value निकालना है, so this into 1/1 plus 10%. ठीक है, 1/1 plus 10% raised to, normally I would have done raised to 1 if it was after 1 year, but it is not after 1 year, it is after 1 month. After 1 month matlab 1/12. So this is my present value. ठीक है, अब same process hoga for the next month, but instead of the first month, now it is 2 months from now. So 2,09,121. This way we can calculate the present value. ठीक है, अब यहाँ पे तो I have shown you only 2 months का calculation. Ideally it should be a full 60 months का calculation. And when you do the 60 months का calculation, what will be the present value? मैंने calculation already करके रखा था. The present value will be 91,31,300. ठीक है, 91,31,300. You will account for this number as revenue, और every month आप इस पे significant financing component add करेंगे, interest component आप इसमें add करेंगे, but it will be a monthly calculation. So long story short, two things. यहाँ पे where we wanted to check whether the finance component is significant or not, we saw what proportion it was of the additional selling, what proportion it was of the total selling price. ठीक है, so to determine whether the financing component is significant or not, we will check what proportion is this additional amount as a percentage of total, and whether it reflects the time value of money. ठीक है, so to decide whether the financing component is significant or not, you will have to do this. Now, how to decide the discount rate? In the first case, if the discount rate in the contract reflects the discounting rate of a separate financing transaction, then use that particular rate only. But where it does not reflect the rate of a separate financing transaction, which in this case was 14%, what you will have to do is you will have to ignore the rate of 10%. This will not be your cash selling price. You will have to calculate the present value of this considering the rate under a separate financing transaction, and then you will have to do your accounting bit. Okay, so this was one part of the significant financing component. Okay, there is And there is a provision in Ind AS 115 which says that a contract with a customer would not have a significant financing component if the customer paid for the goods and services in advance and the timing of transfer of those goods or services is at the discretion of the customer. Agar he has paid in advance, but you don't get to decide. Customer will get to decide when exactly the goods and services have to be delivered to him. Then there is no significant financing component. A substantial amount of the consideration promised by the customer is variable, and the amount or timing of that consideration varies on the basis or occurrence or non-occurrence of a certain event, not entirely within the control of anyone. In that case also there is no significant financing component. Okay, this is the long and short of the discussion on significant financing component today. Okay, now let me answer individual questions. Yes, you will get the recording. Then Akash, are you the same Akash I connected with a couple of months ago? If yes, then you are in touch with the team, right? The team will make sure that your ACCA journey starts accordingly. Okay. Now Vishal has asked a question. In case of IFRS 15, how is bill to ship to model dealt with respect to revenue recognition? See, the bill to ship to model does not have as big an impact on revenue recognition as you might assume. Now, what is bill to ship to? The billing is done to one person. That is, the billing is done in the name of one person, but uh, the amount is delivered at a particular address. Now, you could deliver it to me or you could deliver it to someone else. That will not be a major problem. So in that case, bill to ship to does not have that significant implication. वहाँ पे just you will have to ensure that the performance obligation is completed, then you can recognize the revenue. Then see, if you are a relationship manager, learning accounting might not be the most helpful point for you in your academic journey, in your professional journey. Uh, it's see you what you need is a very specific domain, a very specific idea. You don't need to understand everything of accounting to be able to do your job. Now, uh, let's okay, the purpose of these sessions, as I told you, the purpose of these sessions is to enhance the gap between the academic part that you have learned and what exactly you are doing right now at your work, or if you are a CA student who needs who needs some additional help, if you are a CA student who needs some additional clarification. The idea of the sessions is basically to help you with that. The reason I have kept these sessions free is because I don't want to put a charge on something that does not necessarily concern an examination. But if you are interested in pursuing the ACCA course, if you are interested in pursuing the CA course and you want to attend regular classes for that, that's a separate discussion altogether. So what I have also posted in the chat box, so I answered the question about BSc in mathematics and ICICI Bank. You are eligible to learn accounting, but I don't see how it will really help you a lot in your work. Now, for those who want to uh, see, on my YouTube channel, I will be sharing a link to my YouTube channel also. Uh, Everything that you need to, for understanding certain concepts, for understanding certain topics. I keep on uploading content with respect to accounting standards and with respect to different topics. So you can always check out my YouTube channel. The link is here. In addition to that, I would request you to stay connected with me on LinkedIn so that we can start a discussion on a fresh set of accounting standards as and when you require. We spend some time doing IFRS 15. Next, if you want me to take up financial instruments also, I can do that. The only thing is you will have to let me know in the chat box. Sorry, you will have to connect with me on LinkedIn. Please send me a connection request and I can help you in that department. I have shared a link to my YouTube channel also. So I request you to subscribe to the YouTube channel. And there are multiple playlists that with reference to, uh, with reference to different topics. Recordings will get uploaded in 2 days. So the recordings of this session and the recordings of the earlier sessions, by the way, are already there on my YouTube channel. So I request you to subscribe to the YouTube channel. There is a separate IFRS related playlist. You can check that playlist whenever you want to, understand a particular topic. Please send me a connection request on LinkedIn and let me know what kind of help do you want from me in any professional course that you are pursuing. More than happy to help. Yes, somebody raised a hand. Can you tell me how can I help? Yes, किसी ने हाथ रेस किया था. Okay, no problem. Um, if you don't have any questions now, but you want to understand, if you want CA final coaching, if you want ACC, if you want to pick up ACCA as your career, if you want to do a course on diploma IFRS, or you want to do any other professional course in the field of finance and accounts, you can always reach out to me. You have my LinkedIn ka profile ID. Do stay connected, stay in touch so that any specific point that you want more clarification on, I can help you in that particular domain also. And also subscribe for more such videos. See, वहाँ पे बहुत सारे other topics भी है apart from IFRS. How to reach out to me regarding any course details? I've given you my LinkedIn profile. Send me a connection request on LinkedIn and do let me know whatever course you want to know about, whatever professional journey you want to take up. I will help you with all the details necessary. Don't worry. ठीक है. See, SBR is one of the four papers that you need to clear in order to achieve the ACCA qualification. But Diploma IFRS is a one paper course uh, which is focused only on IFRS. Okay. So just make sure that if you are doing the Diploma IFRS course, you want only knowledge of IFRS and which is it is only focused on IFRS, but the ACCA course is far more detailed. It is not only about IFRS. There are topics like advanced financial management also, advanced auditing also. You have topics like strategic business leadership, which is a case study paper. तो वो CA जैसा full fledged course है. Diploma IFRS is a 6 month course. You can finish it very quickly. So again, the contact details, my LinkedIn profile is the best way to stay in touch because I might not check my mobile phone that frequently. But what I do check is I do check my LinkedIn very frequently. But I will still give you my phone number. You have my phone number. You have my YouTube channel. The only thing left is my address. So that, of course, is very difficult to share. I'm also giving you my mail ID. See, if you have done SBR, then what is the point of doing the diploma? Na? ACCA qualification already covers everything. So I would urge you to finish your ACCA qualification if you have not already finished it. Okay. So see, USCMA is a depends on what kind of freelancing you want to do. USCMA has a very different niche. It has a very different kind of job opportunities. So if you are from the accounting, auditing, finance wala domain, CMA might not be the best course for you. You need to look at other career options. So for those who want to have a one-on-one connection also, just send me a connection request and drop a message on LinkedIn that this is what you want to discuss. Then of course we can connect for that. After ACCA, you have to tell me what are your interests. Then I can tell you better. See, I would say CFA and ACCA are not, see, ACCA is or CPA is financial reporting, auditing, taxation. CFA is finance. So If you want to do two courses together, it has to be with a different perspective. अब दोनों में जॉब नहीं कर पाओगे ना. You can only do one job, right? So you'll have to be mindful about that. Then you will have to decide what direction you want to take your career in. है ना, आपको वहां से आपका एक डिसीजन लेना पड़ेगा. After ACCA, if you want to branch out completely into finance, then think about CFA. But CFA is a 3-year investment and far more intense as compared to other courses. So your decision should be based on that. If you want to be an auditor, okay. Now, one more question. Are you focused, or do you want to work only on Indian clients, or do you want to work on US clients also? If you want to work on US clients, then CPA is the right course for you. Okay. If you want to focus on Indian clients and UK clients, then your ACCA and Indian CA are enough. If you only want to focus on clients in the UK, then you should do ACCA, which you have done, I think. So if you want to get US clients also, then you should definitely consider the US CPA course, which is then in that particular direction. Okay. And on my YouTube channel, I do keep on posting, links for, and recordings of different types of accounting standards and other areas. So you can subscribe to that one also. I have posted the link again. Okay. Whatever questions you have, I'm always there to help you. 8 years of accounting experience, please go for CPA. We conduct sessions and batches for CPA also. So everything under the finance domain, finance and accounting domain, ACCA, CPAs, CMA, CFA, Indian CA. So Indian CA I do in a very different mode. The other professional courses I do very differently. So for more details, please connect, stay in touch, do attend the next edition of the masterclass also, which will be on financial instruments. We'll be starting that discussion after this. So thank you so much, guys. Thank you for your time. A pleasure to meet you all today. We'll again connect next week with financial instruments. Thank you.